Hello and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for CommunityFT members, in which we're going to take a look at some major movements to potentially come over the next 24 hours. But before we do that, let us at this point embrace a quick risk warning. So if we can familiarise ourselves with the information in front, engage as much as is possible, simply so that hereafter any decisions you make in your trading are of a fully informed nature. So what's on the cards for us this morning then? Well, let's take a look at the Canadian dollar, okay? And that'll help us value or determine the price of a currency. Let's also take a look then at an energy. So we'll be looking at crude oil to help us with that. So let's switch to the platform, okay? Now in front of us we're looking at the daily chart of US dollar, Canadian dollar. A very interesting observation is the following point. The inverse correlation with respect to this market and crude oil. And the reason being is that when this market weakens, or really I should say actually, when crude oil falls in price, the Canadian dollar weakens strongly. And that's effectively as a result of the Canadian dollar being very dependent on oil and oil production and exports as an economy. So it's useful to think of the Canadian dollar weakening after the fact of crude oil. And in a way, this is almost like technical analysis, okay? Because even though we know there's fundamental factors which drive the same, we can technically observe and measure those correlations. And the correlation or the way to apply that might be that after a sufficient level of falling in crude oil, pending some weakening of the Canadian dollar, we might then consider positions. If of course the Canadian dollar falls further and if crude oil even falls further. Okay. Now let's take a look at some other indicators here. We have the 55-day EMA and the stochastic oscillator on the chart as well. The 55-day EMA can help us look for positions or look for a primary trend, whereas the stochastic with its overbought and oversold levels can help us look for secondary trends therein. Very similarly, we can analyze crude oil in the same way. Only we're looking at the stochastic, not stochastic, I should say. We're looking at the parabolic SAR, the 55-day EMA, and also the commodity channel index. Now, the commodity channel index itself can be used to confirm breakouts that might be signaled otherwise by the parabolic SAR and 55-day EMA. And effectively, it's using all those as an overall system, as an overall strategy, seeking confirmation from each component. So we hope this has been of help. If you have any further questions, please do not hesitate to get in touch. We welcome all inquiries. We shall catch you tomorrow. Have a great day, and as we say here, keep learning.